Hello. All right. Welcome to this lesson. In this lesson, we'll be looking at technical analysis, and here is an advanced course. So we're going to be going into more details as to what technical analysis is, and we'll be looking at the market and then applying what we are going to learn. So I'd like you to pay close attention and then be attentive. Okay, so basically the first thing I want to tell us is that I use TradingView as a platform to do my analysis because I see it as a more trustworthy platform, and it helps you with tools that you can use to do your analysis carefully. So if you want to know more about this, you can go to tradingview.com, register with them, and then you have access to this platform. We have a lot of tools that will help you to be doing your analysis, unlike your MT4 that only give you something like this. All right, so this is TradingView and it's accessible to everyone. All right, so first things first, we know that our market moves in three ways. Talk about trend is up, and then I will say when the trend is up, it creates a push, a pullback, a push, a pullback, and then a push. All right, with this we create an uptrend. You can take a line and draw it below, then we know this is an uptrend. And then the market can also create a trend downside, pull, push, pull, push, and then we can take a trend line and draw a line to the downside. Alright, so these are the two scenarios the market operates. And then the last one is when the market is moving from up to down, without no clear direction. It doesn't have a clear direction. The market is just moving up and down. So when you see this, you know the market has no clear direction. Alright, so these are the three phases the market can be in at a particular point in time. This is very, very important that you understand this. The earlier the better that you spot all these three patterns, all these three structures of trend, then it will be easier for you to know where to enter the market. Is that okay? So anytime you go on your chart, you must be able to first of all, as a technical trader, determine whether the trend is up, creating higher highs and higher lows, or the trend is down, creating lower highs and lower lows, lower highs, lower lows, lower highs and lower lows, or the market is ranging. So what do you do in the ranging market? You stay away from the market. We don't trade this. This is bad. We don't trade this. We can only trade this, and this. Alright, so we want to see a clear trend. We want to see the market moving clearly to the downside, creating a structure, or moving to the upside, creating a structure upwards, and then we can know our levels to take a trade. But we don't want to see the market moving choppy and then without a clear direction, because you can enter a market here and then it gets here, it reverse against you, and you lose your money. So as a technical trader, the first thing you must do is to understand that you are a technical trader and trade in line with the direction of the market, because the first rule of trading is that you must buy low and sell high. Alright, you don't buy in a sell bias market, you don't sell in a buy bias market. You've got to understand this. Very, very important. I'm taking my time to drum this so that you can understand. If you cannot spot the structure of the market to the upside or the downside, leave the market alone. We don't trade this kind of structure. We only trade the market when it's moving up or moving down. Alright, so now you get it. So now let's move on to the chart. Now we're talking about technical analysis. Alright, so looking at the chart, first thing we want to know is the direction of the market. And One of the rules in trading states that the higher time frame is the direction of the market. Proves the direction of the market, the higher time frame. And now in this place you can see that I'm on the daily time frame, meaning every candlestick you see here, every candlestick, let me zoom out to see, every candlestick here means 1 day of price action. 1 day, 1 day, 1 day, 1 day of price action. Alright, so I'm zooming out. So when we talk about technical analysis, we're talking about looking at the market, their overall direction, and then from there we can take a decision on where the market is going next. So the first thing first, once you come on your chart and you open your currency pair, and I'm looking at Euro USD here on the daily time frame, we will scale down or tissue scaling down, is that first of all, I want to look at the levels the market has been before, because every market moves and then create levels. Alright, so first of all, we can see that here we see a market moving to the upside. So we can take this now, draw a trend like this. Why do we say so? We can see that the market pushed to the upside, came back, it pushed, came back, then it's pushing again. So this is a push phase. Alright, and remember, we don't buy in a push phase. I will explain that further. So the thing is, now we have identified the structure of the market. Remember, we are identifying the most recent structure because we are in the recent time. All of this to the left side, they are past price action. This is what is happening right now. We are focused on what is happening right now. This is the new trend. This is the old trend. This is the new trend. The market was going down from here. It reversed and started moving up. Now, after we have identified the structure that it's an uptrend, so what are we looking for now? We know that we're in an uptrend. So what are we looking for? We're looking for the market to come back to a low, because we must buy low and sell high. Alright? So the market is pushed to the upside. It has to reverse and come back and give us a point here where we can actually take a buy position. So from the higher time frame, we have discovered that the trend is up. I'm talking about technical analysis now. And then after we have discovered that, we want to look at levels the price got to and reversed. Now if you look to the left, you can see that there's a level here. Alright, now I can take my rectangle tool and then put a rectangle box and extend it to the left. The reason I'm doing this is that, look at what happened. The price came up here, it tried to break it, it could not, it reversed down. Alright, so the price is now approaching that same level, meaning that there is a potential that the price will reverse again from this place. On multiple attempts to break this place, the price will definitely reverse back again. Alright, so in technical analysis, we look at the overall direction of the market, and then we look at current price action. Don't forget this, current price action. And the current price action is that the trend is up. And then we are not going to buy in the push phase of the market, because this is already creating a higher high. So we must wait for the market to retrace back and give us a buy opportunity somewhere here. At least from our last class, we can take our Fibonacci and then we draw from the low point to the high. At least 50% of the previous move. Here, 50%. Alright? So you see what I'm doing now? Then we can be looking to take a buy position to this point. So this is the only point where we are going to take a buy. So what do we wait for? What are we waiting for? We're waiting for the market to pull back into this area, and then we'll take a position. Then we'll take a buy position and then we'll be targeting some of these highs here, because we can see from previous structure it's a previous high. So meaning sellers are here. There are sell orders here. There is selling pressure here. Look at the way the market left that place and never returned since 2018, and then this is 2020. It's approaching that place. The market will surely react. So that will be our target once this market retraces back, and then we'll take its buy position. So in this market, we are not buying until the market retraces back. Alright, so in technical analysis, we look at the overall direction of the market, and then we know where we are. You need to know where you are in the market. You need to know where you are in the trend, because the market moves forming trend, and the trend is higher high, higher low, higher high, higher low, higher high, higher low, then a possible higher high. Alright, and this is what an uptrend is. What an uptrend. You can see the trend is up. An uptrend. So we draw a trend line like this. It becomes a channel. Alright, so until the market pulls back to 50%, at least 50% of the previous move, then we are not ready to buy, because we must always buy low and sell high. In an uptrend, we are buying low. In a downtrend, we are selling high. And I told you, the market has to be in one of the trends before you can take a decision. This is why technical analysis is very important, and I'm taking my time to explain this so that you know better what I'm saying. Alright, so you need to know the direction the market is moving from the higher time frame. Okay, alright, so now we can see clearly we have already done our analysis on this pair. This is the Euro USD on the daily time frame. Now, the reason why I zoomed out is for me to see clearly the movement of the price. I zoomed the chart out so that I can see possible areas where price touched and then bounced back, touched and then bounced back. Alright, so looking at this chart right now, you can see this place. The market came here since 2018 and never returned back. It is 2020 that is going back there. Alright, so this means that this place is a very strong area where the price can reverse, because in technical analysis I will teach you in one of our lessons. We'll look at risk management, we'll look at take profit, then we'll look at stop loss levels, where to put your stop loss, where to take profit. You know that some of these places, these highs, are very important to the market. So when you're doing analysis, focus on the current price action, the current move in the market. Don't always look to the left all the time, but you should look to the left to see the levels where there are places where the price might have problems. For example, here you look at what happened here. The price had struggles here. This is a strong support resistance area. Remember we talked about in our last class, this place the price broke and turned, it became support, it broke, it came back, it became a support here, it came back, it became a support, it broke it became a resistance, it could not pass, it broke it again, it came back, it broke it here, it retested it and continued. So this is a strong level in the market. Alright, it's a strong level in the market. And then also you can spot these levels by just zooming out and looking at the chart. Something that can help you too is to change to the line chart. The line chart will help you a lot. So most technical traders, they use line chart. So look at it here. You can take it to the line chart. Alright, the line chart, you see the lines of price action. One of our videos I talked to you about the line chart. I told you we have three types of charts. We have the line chart, we have the candlestick, we have the bar chart. Any one that is good for you, you can use it to spot levels. But it's good you use the line chart, to just get a sketch of what is happening in the market, and then you can switch back to a candlestick to see the patterns that are playing out clearly. Alright, so now I want to teach you something else. When you're doing your technical analysis, you must also make sure you study the structure carefully. Now look at what happened here. You see the push, you see the pullback, it was very clear. You see the push, you see the pullback, but it was failing before it managed to push up. Now the reason for this is what we call accumulation. Now I told us in our first one of our lessons is that once the price doesn't move straight all the time like this. It doesn't just go straight like this. No, you won't see this all the time. What you will see is that the price will move and then accumulate some orders, will move again, just like that. Can even come back to this place, just like that, create a high, just like that. This is what you find most times in the markets will be doing. But your ability is to know that no matter what it's doing, the trend is up, the trend is up. So you'll be looking to take your positions at 50% of previous moves. So you wait for the market to come back to at least 50% of the previous move before you take a position to enter the trade. Alright, so this is very, very important. There's always going to be an accumulation phase. So when you see movement like this, see price like this, don't be afraid. Don't be afraid. Alright, just make sure you get a clear trend in the market and then know where you are. Okay, are you in the push phase, or are you in the exhaustion or retracement or the pullback? Alright, and remember where to buy and where to sell. It is very important. In an uptrend, you are only buying when the market is low. You are not buying when the market is already high. Is that okay? Alright, so now let's move further. Something else you want to learn, I will teach you right now, is that you can scale down to actually know when this market, is reversing. As a technical trader, you are looking to see the market move in the direction you have speculated, and then looking to take your trade in line with the direction of the overall trend of the market. So right now, for example, I have to scale down to my 4-hour time frame and then begin to look at the price action more in detail. Don't worry about the lines. Alright, so I've seen that from the higher time frame, the market is in a push phase. I know where I am. I'm not scared about the structure. I know where I am. So I can go to my 4-hour and begin to do the same thing again. Alright, so you can analyze the market from any of the time frames, provided you have a strategy to trade. And the strategy I taught you, you can apply it on any of the time frames. Alright, so for example, I'm using the 4-hour time frame, maybe because I'm an intraday trader. I don't want to waste much time. I don't have time to wait for the 1-hour candle, for the daily candle to close before I take my trade. I just want to see how I can take my trade within 4 hours and I'm done. So what I'll do is that I will go down to the 4-hour time frame and I begin to look at the structure of the market. I go to my line chart and I begin to see that as at this point the market was ranging. So I can say the market went to this up here, it came down from this low, and then at this point the market was ranging. The market finally broke above it. Alright, so now we are looking for the retest, meaning the price should pull back for continuing. Okay, so I can go back to my candlestick chart and then zoom out and then begin to see clearly wow. So the market was ranging on this point, moving from ceiling to floor, ceiling to floor, ceiling, and then it will break above the ceiling. And what do we see when the market break above the ceiling? It becomes a support. So the market retested quickly and then left this position. So the market right now is in a push phase which started from here, because we are seeing that the market came here, it bounced back, but it did not return to this low. It started another journey from here. So if you look at what the price did after coming down here, it went up. It started forming a trend. Are you seeing it now? It started forming a trend. So what do we expect now? A potential pullback to some of these places, some of these lows between these places, before a pull up. Okay, so this is what we see when we do technical analysis. You have to study price movement and then know the levels it's creating, because price moves creating levels. Alright, so automatically here we have a level that was created, that was never retested. Why do we say so? Remember, when the market is moving, until the high is broken, we say that the trend is not formed. This high must be broken, and this becomes a level, and this becomes a level. So watch this. The market can retest here and then continue, or can come back here before continuing. Alright, it is when the market breaks, returns from here, and then breaks this low point, and then retest it, we can say the direction of the market has changed to a downtrend. But as far as the market is still moving up, then the trend is up, then the market is in a buy setup. Okay, so you must understand this. This is very, very important. Technical analysis is the way to go. You need to decipher the market and break it down, break the structure down, and then you'll be able to know the next move of the market. Alright, so looking at the structure of the market from the higher time frame, we identified the range. So we mark our range out. We don't trade the range. Alright, although you can scale down to the lower time frame and then begin to look for these patterns to trade. For example, look at here in an uptrend, you can see the trend moving up. Alright, so we can actually scale down and then begin to look for some opportunities here. Look at what the market did here. It went up, came down, went up, came down, went up, came down, you know, before coming down. But all of this it did, it never broke the previous low, because this is the major low of the market now. This is the first low after this push. It never broke it, which means the trend was still up. So this could just be a manipulation or something else. Alright, and then you could see the push up again. Boom, started forming another structure, and then the structure was broken. The structure was broken. This low was broken. And what do we see was the low is broken? The trend was up, higher highs and higher lows. The low was broken, then it formed a lower high, lower low, and then we have a lower high, lower low, lower high, lower high, lower low. Sorry. Then we had a high, we had a low, we had a higher high. Look what the market is doing. This point was broken. So the trend has reversed. First of all, the trend was down here, but now the trend is up. So you see how we decipher the market. So go back to your charts and then practice these structures. Practice will make you perfect. Alright, so this is technical analysis. Very, very important. You need to know how the structure of the market is moving, and then look at places where you can take position. Thank you very much. I will take the next lesson.